Welcome back to Technical Analysis with Lennox. This is midweek market update with myself. And on this week's video, we'll talk about the US dollar, South African rand, oil, and maybe some bit of S&P 500 to see where time takes us. But without wasting much of it, let's just get right into it. So this chart on my screen, this is the US dollar index. And if you're following me on Twitter, you'd have seen these analysis before. Let me just zoom out a bit just to remind you. So you might have seen this analysis, right? So at the time when I drew these white lines here, I only had two of them. And this is what I'm talking about here. Just give me a second. I'm just aligning my charts nicely so that we all have the same perspective, right? So these are the two trend lines that I had on my chart. One, two, right? And on the post, I said this index is just broken out of this accumulation zone here, which started around 14 November, and it has recently found a low in February the 2nd. And from there, it's been trading up. If you are familiar with technical analysis, you can see some white soldiers here. There's three candles here, so this is a very bullish sign for me. And after these candles, we're likely to get some retracement, of which we did get just from the 6th of February going into the 14th of February, Valentine's Day. And this happens to be the date that CPI was released. And I'll touch base on the CPI and all of that, right? And so what I've just updated on my chart is this trend line here, which is actually parallel to this trend line that I had initially. If you're looking at this chart here, we did test our breakout zone, which ranges from 102 going into 102.625, and market really created a double bottom around this level here when CPI was released. So this, for me, this was a bullish signal in my opinion, but everything happened so quickly. We saw CPI month on month coming as expected at 0.5% or 50 basis points, and we saw CPI year on year coming a little bit higher than expected. It's 6.4, contrary to the forecast at 6.2, if I'm not mistaken. And this is telling us something very, very important, right? So if CPI came in higher than expected, this should tell us that we should expect more rates coming from the Fed. We should expect rate hikes from the Fed. So I don't think we have yet reached our pivot area. We should still expect some further hiking coming from the Fed, and this should actually take the US dollar further up. And equally so, we're likely to see the S&P 500 losing some bit of points here and there. But in terms of technical analysis, this right here, this second trend here that I've just drawn here, that market is broken out of, is also telling us that this currency or this index is further bullish, and we should expect some further upside on the currency. My targets, first target or nearby target, is around 104, right, dollars. And then our second target on the currency is 105.531. So this is what I'm looking at. I'm expecting dollar to continue appreciating, and this is in support with the CPI data. When we get data for the interest rate, I think we're likely to see some hiking from the Fed. So pivoting, maybe not so soon. And these are the implications on the charts. This is what we're likely to experience. And also remember that this this information has direct impact on our South African rand. So ZAR against the United States dollar, that's also important. And maybe we should also talk about the fuel price and how it's likely going to be affected by these data, right? So when we're looking at this chart here, remember I set my target on DXY dollar index is around 105. And if this DXY here, let's just go back to this chart here. So if this DXY is to reach these levels here, it means that our currency against the dollar is going to be weak by default, by just a matter of US dollar gaining strength. Our currency against these currencies should lose some strength. And I think this is nicely supported by this information on the charts. So when CPI came, we saw USD ZAR testing these levels here. We saw the rand appreciating temporarily to 17.65, rounded to 2 decimal places, and it actually rejected, showing us that there is some bullish momentum on this currency pair. And my next target on this pair, I actually wanted to say stocks because I talk a lot about stocks, but today we're talking currency pairs. And like I said, my next target on this pair is around 18.40, going into 19 rands per dollar. Even though 19 rands per dollar, this may be a little bit far-fetched, but based on this technical analysis, it is possible. And let me just give further analysis on this. We're likely to see a retest on this trend line here, and this is 19.42, right? And if this is to happen, we're likely to see some further hiking on the fuel. So this is actually bad news for motorists too. And I think maybe we should also look at the Brent oil and see how that can actually correlate with this. If Brent oil can appreciate simultaneously with this currency pair, if Brent oil appreciates and our currency depreciate, this is going to be a nightmare for motorists. But based on this chart here, this currency pair, I can see our currency, local currency, depreciating further to, at most, I would say 19.47 per dollar. So this is not looking too good. And like I said, maybe let's look at the Brent oil, right, and see what is happening here. So when I'm looking at this chart here, there seems to be a head and shoulder that's creating, which also goes with this trend here that I'm trying to force. So this is a downtrend, right? There's a downtrend, and let me just mark this level here. So this level here is 66.99. So let's just round it to $67 per barrel. So this is a support of this trend line here. So if market is to obey this head and shoulder here, I think this would be good for our fuel prices. Of course, we can still see some fuel hike, probably R1 on the 995 unleaded. We're likely to see those. I think there's already talks that we're likely to see that hike in March. But if this commodity depreciates to about $67 per barrel, that might cushion that hike, right? But there's also a possibility that we might break above might break above $87 per barrel. And if this happens, and it happens simultaneously with rand depreciation, this is going to be a nightmare for motorists, and let's just hope this doesn't happen. But from the technical analysis side of things, this is very much possible here. Of course, we have just tested this trend line here, and it's not looking too bearish. We can easily get a breakout around this level here. So this is the level that I am watching on the Brent oil. If we can stay below this level of 88 going into 84, I think we won't experience much of fuel hikes. But if we stay above this level here that I've just told you, we're likely to see some further fuel hiking. And I think this is my analysis for this week. I think this was more economics than technical analysis, but all these things work together to communicate a certain message. And from what I'm getting from the charts and just the macro environment, I think we are in it for a very, very tough year. So prepare yourselves and be financially ready for this disaster here. Remember, for Brent oil, if we can break above this range of 84 going into 88, this is likely to cause more fuel hike. And if it happens with the depreciation of our local currency, it's just going to worsen the situation. But this is my analysis for the week. And remember, if you haven't subscribed to the channel, I don't know what you're waiting for. Kindly hit that subscribe button. Comment down below. Leave your thoughts in the comment. Also, you can leave your stock request on the comment. I'll definitely gets to it in no time. But otherwise, let's meet again next week, same place, same time. It's on.